Well, welcome to the Snowbirds Expat Radio Podcast. I'm your host, Jerry Scott. Today's episode, we'll be discussing cross-border employees. And the conversation will be based on Canadians, Americans that live on one side of the border, but they're actually traveling to the other side of the border to work. So our guest today is Frank Casciaro, and he's a senior manager at RSM. Now, I was going to say he's from Toronto, Ontario, but I'm finding out he's from Barrie. And before we went on the air, we were finding out that he was actually a bit of a rock star as well. So if you want to get in our good books with Mike and myself, that's Toronto Mike. We love talking about music. Probably the best thing we can talk about. That and the Toronto Maple Leafs and the Vancouver Canucks. So Frank, welcome to the show. And
thanks for having me.
Before we jump into to our questions today and our topic, tell us more about yourself and more about your firm as well.
All right. So thanks, Jerry. Thanks for having me on. So I lead our global employer services group for RSM Canada. And what we specialize in is any sort of cross-border employment arrangement. So anytime you're looking at sending an employee to work across a border, or what seems to be the norm post-COVID, hiring employees to work virtually from their home office from another country, creates a whole list of payroll and tax issues whenever you have, employees across these borders. So our group gets involved to help navigate through all that. And as I said, I'm with RSM Canada. RSM is an audit tax consulting firm. We're the fifth largest firm in the world. We're in over 120 different countries, and we provide a whole suite of services, anywhere from audit tax, transfer pricing, mergers and acquisitions, incentives, grants, and kind of everything in between. Kind of a one-stop shop for any accounting tax needs that someone may have. So,
well, I am such a small town hick. I'll tell you, when you said that RSM is one of the fifth largest accounting firms in the world, I did not know that, and I'm a little bit intimidated by that knowledge. So, but I'll tell you what, this is such a great topic, and I say that every time when we dive into immigration or other cross-border tax, but this is something that's coming up more and more often. We're seeing so many employees that are with Amazon or Apple or whatever the case is, and they're moving into these smaller border towns. And when Carson had reached out and said that we're going to get Frank on the show and we're going to build an episode around cross-border employees, I got pretty excited. So are you ready? Can we jump right into these questions, or do you want to play a tune, or do we have a sing-along before we get going? Or
no, I already did my warm-ups, my stretches. I'm good to go. So let's fire away.
Okay. Well, we gotta later on we'll have to start telling rock and roll stories on different episodes, because we do get a few of them over here in Maui.
Yeah, include me on those ones. I'll be more than happy to share some stories.
Oh, I'll tell you that they're hockey stories and rock and roll stories. There's nothing better. Okay, so let's get into the questions. So hopefully we got enough time to answer all these questions. If we don't, I really see this as a great opportunity to turn this into a webinar as well. And we just built this new feature on our app, which will be notifying everybody when we have a live webinar coming up. So all those folks who have downloaded the Snowbird Day Tracker, US Day Tracker, stay tuned. This new application is ready to go. We just want to make sure we don't annoy everybody with too many notifications on a daily basis. So question number one, what are the tax obligations for the employer with cross-border employees? For example, a US employee working in Canada.
Yeah, great question to start with. So whenever a company, an employer sends an employee to work in another country, so as you said, for example, a US employee working in Canada, there's a requirement for that employee to be set up on a payroll in that particular country for the time that they're working there. So for instance, if you got a US employee that's coming to Canada, there's a requirement for that US employee to be on a Canadian payroll and be subject to Canadian source deductions in the same manner as having a normal Canadian resident employee. And Canada in particular is very aggressive when it comes to their payroll obligations, where even if someone comes to Canada for one day, the requirement for that Canadian payroll applies regardless. So this is where some of these issues come up for a lot of these companies that are sending employees across borders is they're only thinking of domestically where they're from, and like, oh, as long as I keep them on, the normal payroll, there's nothing to worry about. But they sometimes fail to realize that, once you cross a border, you're in a different country with different obligations and requirements and issues and all that. And sometimes, not understanding or being aware of them, can sometimes get you into trouble. Payroll in particular, definitely Canadian payroll in this case would apply as soon as someone crosses the border.
I'll do my best to make sure that if I have any thoughts come to my head, I'll try and save them towards the end because there's so many different things that come up. So here's the next question. What are the tax obligations for the employees when they cross the borders using the same example?
So for that U.S. employee, they're technically subject to Canadian personal tax for the time that they're in Canada. So ignoring anything else, as soon as they cross that border, they're subject to Canadian tax for the time that they're here. So their total compensation would be allocated to the days that they're working in Canada. Now, depending how long they're in Canada for, there could be an exemption for them being subject to Canadian tax. Canada has many tax treaties with a lot of countries, the US definitely being one of them, that provides relief from being subject to tax in Canada. And if they qualify under that treaty, they can be exempt from paying tax in Canada altogether. Now, the beauty of that is that same exemption can also be used by the employer to help reduce or alleviate their payroll obligations in regards to that employee, right? Because, at the end of the day, there's no reason to do all this withholding if the employee doesn't have to pay tax at the end of the day, right? You're just going to take money from them just to give it back to them when they file a return. Now, the one thing about employing that exemption for payroll purposes is that you have to apply for a waiver to basically tell the Canada Revenue Agency, hey, I have an employee, they're exempt under a treaty, here's the waiver to prove it. So this way, I could get out of having to withhold or do any of the payroll obligations for that employee.
Now, are you finding that there's a lot of services out there? Because we're seeing this more often, especially these border towns where people are, and this might open up a whole different conversation, but we're finding that these people, when they first move up to Canada, they're Americans, they move up to Canada, their employer is still the Amazons of the world. Now, until they can get that straightened away, are they technically working in United States, and do they have a tax exposure if they're living in Canada and they're working in United States?
It really comes down to where they're considered a resident for tax purposes. For Canada, you're a tax resident if you have residential ties here. So if you have things in Canada that say, yeah, I'm living here, like if you have a house here, if your spouse and dependent children are here, if you're covered under healthcare, if you have a Canadian driver's license, like all those things come into play. On the US side, however, their system is based on citizenship. So if you're a US citizen, regardless of where you're actually living, you're considered a tax resident of the US. So when you have a situation where you have a US citizen who moved to Canada to work, they're considered a resident of both countries. And because of it, there's a requirement for both of them, or for that individual to be on both payrolls in both countries. Now, again, the tax treaty that I mentioned can help alleviate a lot of that, depending on their situation and where they're considered a resident and so forth. But you could run into a situation where you got requirements to be on two payrolls and then also have to file tax returns in both countries. Now, that doesn't necessarily mean you're paying tax twice or having tax withheld twice. There's some mechanics behind the scenes to help alleviate that, but at the very least, you're reporting in both countries.
And these Canadians, I'm sorry, this person, we'll call him let's say we'll use an example of an American moving up to Canada, but still work for that U.S. person, their residence is Canada. Are they able to contribute to an IRA or the 401k plan, or do they have to contribute to the RRSP?
It all comes down to where they're considered a resident, which payroll that they're on. When it comes to a 401k or an RSP, under that tax treaty, there is a provision where you can actually claim a deduction on the Canadian return for a 401k deduction, as long as you've got RSP room. So the 401k and RSPs, both countries look at them the same way and kind of give you the benefit of contributing into those programs, right? Same as if a Canadian went to the US, they have RSP contributions, the US will give them a deduction for it. When it comes to IRAs, Roth IRAs, TFSAs, those other type of investments, you have to kind of look at it to see how each country would tax it. If they do tax it, how they treat it, whether it makes sense for them to contribute to it or not. Sometimes the benefit of having it outweighs the tax cost, but sometimes it doesn't, right? It all depends on their situation. So
Now, I'm getting off subject here because I know you have some great questions here, but do you find that this is happening more and more often where you're seeing the Amazons of the world are starting to employ a lot of Canadians, even if they don't have a head office up here? Maybe Amazon's a bad example, but some of these smaller employers that are allowing people to work in Canada as Americans, are there services out there that provide all the payroll and all these other things that are needed?
yeah, one of the, I guess, silver linings, for lack of a better term, coming out of COVID is businesses realize that they're able to operate and still continue on with employees that are located in many different locations, right? Gone are the days where you actually need someone in the office. They can now have someone work from their home office and still be able to do their job. So, in these instances, Amazon or a lot of these other companies, they go wherever the talent is. They're not necessarily tied to a physical location outside of like, well, if there's talent in this country, we're going to hire them because they're the best people. So in regards to the services and to help that, RSM, obviously, we provide services to assist with any sort of cross-border payroll and personal tax issues in regards to those employees and any consulting in regards to that, as well as, there's other payroll providers out there and so forth. But, as kind of like my selling hat on right now, the one benefit that we have is that we could do everything kind of under one roof in terms of everything that's required in regards to these cross-border employees. Sometimes when you deal with outside parties, they only do one piece of the puzzle, right? So just makes it easier to come to us to help you guys out with anything that you may need from a cross-border employment standpoint. So
Okay. So what happens when the employer hires a foreign employee to work entirely remote from their home office? For example, a U.S. company that hires a Canadian resident working from their home office.
Okay, so in this situation, you've got a U.S. company that's hiring a Canadian to work out of their home office. Outside of that U.S. company has nothing in Canada. They're not registered. They don't have any other transaction business here. They're just hiring an employee like an office employee. Because that employee is a Canadian tax resident for their own personal tax purposes, the obligation for Canadian payroll applies just based on that alone. So regardless of what the U.S. company is doing or not doing in Canada, if they're hiring a Canadian resident employee, they're required to have a Canadian payroll set up for that individual. And that's one of the things we've been trying to stress to a lot of companies these days with these virtual employees or working, remotely from home offices, is that they may still have implications or requirements in that country just because they have an employee located there. Definitely from a payroll standpoint. And definitely in Canada, that would apply.
Okay.
Yeah.
So what if the remote employee travels to the country of their employer to perform the same duties?
Well, in this case, now you have someone that we usually refer to as a business traveler or someone that, as part of their employment, they're crossing borders constantly, right? So in this example, if you have that Canadian employee working out of their home office, but you want them or you expect them to travel to the U.S., assuming they're not a U.S. citizen, now you have this employee that's subject to tax in the U.S. for the time that they're there, right? And again, there'll be a requirement for them to be on a U.S. payroll. Now, under that Canada-U.S. treaty, the same exemption applies in reverse as well, right? So there could be a way for that Canadian to be exempt from U.S. tax. Now, the thing with the U.S. side is that whether you're subject to tax or exempt, you still have to file a tax return to claim either one, right? So there's still always going to be a compliance requirement. When it comes to the payroll side or withholding side, that same exemption could be used to avoid or kind of reduce the payroll obligations in the U.S. If, however, for whatever reason, that employee is subject to tax in the U.S., let's say the treaty doesn't apply, on the Canadian side, because the withholding applies regardless because they're Canadian residents, you can apply to have the Canadian withholding reduced to take into account what was required on the U.S. side. At the end of the day, this employee is not going to be subject to double tax, right? The treaty allows a foreign tax credit, which basically lets them claim a credit on one country's tax return for tax paid in the other country. So you can have that same foreign tax credit employed for payroll purposes to reduce or eliminate the double withholding. So at the end of the day, the employee's not out of pocket anything, waiting to get it back at the end of the year. But with both countries, paperwork is required in order to invoke these exemptions, right? You can't just necessarily apply it and be on your way. You just have to kind of get permission from the tax authorities before you're able to do any of it. And unless you get that permission, you're not able to. So sometimes planning ahead of time is required when you know you're going to have these cross-border arrangements. So
Now, would RSM have immigration division as well, or do they have immigration lawyers on staff?
Not in Canada, and not in the US, but I know our RSM office in the UK has immigration in-house. So the immigration point, or the immigration with RSM, is kind of random depending on what country that you're operating in. So for Canadian and US purposes, we have relationships with immigration law firms where we get them involved to help the immigration side of things. So we handle all the tax side, we get them to help out with the immigration side.
Okay, so what should employers do to ensure that they are aware of their foreign exposure?
Well, the main thing is to understand or be aware where your employees are and where they're traveling to. And I'll give you an example. During COVID, we were having a call with a particular client, and their employee was calling in, and they had a background that showed palm trees. So everyone was just assuming it was one of those virtual palm trees, where they wish they were, not necessarily where they were. And then throughout the course of the conversation, it became known that that wasn't a virtual background. That was real palm trees. And this person was somewhere in the tropics. And the employer or the company was not aware of it at all, right? Well, now all of a sudden having that person sitting in a sunny area that's not where their company is located created a whole bunch of tax issues, right? So we stress that companies should always be aware where their employees are, whether it's in a virtual assignment relationship or they're travelers, just to keep track, because some countries have certain thresholds that you have to meet to be taxable. Other countries, if you just happen to sneeze in their direction, that's enough to be taxable in that country. So you definitely want to keep track of where your employees are at any given time, and then work with your tax provider to see what the implications are for those countries where those employees are located.
I could imagine that the average Canadian who's just no ties to the United States whatsoever lands this incredible job from a US company, and they get to work at home, work for this US company. They really don't have any other exposure to the United States whatsoever. That's really on the employer.
Yeah, I mean, someone in that situation, they wouldn't really know about any of these requirements, right? They just know, hey, I got hired by this US company, good job, I get to work from home, they just pay me whatever. At the end of the day, as long as that individual reports their income on a personal tax return, whether they get a T4 or a W-2, which is the US version, or any sort of pay slip, as long as they report their tax at the end of the day, they fulfill their obligation, right? You're right that the issue now is on the company side, because their obligation is to run that payroll. So even though Canada gets their tax at the end of the day by this individual filing their tax return properly, that obligation from a payroll standpoint rests with the company to ensure that they did that payroll, right? So there is exposure and risk for that company for failure to do that in regards to penalties and interest. And payroll obligations is one area that Canada Revenue Agency loves to audit because it's easy money for them, right? Because there's no real way out of it. If there's a requirement from day one, they're going to hold you to it from day one. And these waivers that I mentioned previously, none of them are retroactive. So if you have that treaty exemption in place, unless you get that waiver in place, the tax authorities won't care. They'll be like, nope, you were required to do this for whatever year it was applicable. We want our money now. So, and then it becomes a little bit of a headache to try to get some of that money back if we can. Penalties and interest are going to apply regardless. So there's two obligations that come into play, right? There's the individual has their own personal obligation, and the company has their obligation. So if one does theirs, it doesn't necessarily mean the other one is automatically covered, right? They each have to kind of fulfill their side of that coin. So
Okay, so now we're getting to this more complicated stuff when we look at equalization, what they would be paying for tax on the US side. And now this employee is going on an assignment. They're in Canada, they're American, and they could be paying higher taxes. How do the employers kind of make that fair? Because here you go to Canada, we've got a great job for you, but you're going to pay higher taxes, and oh, by the way, you're going to be paid in Canadian dollars. What are employers doing for the employees in that situation?
yeah, and rightfully so. A lot of employees, don't necessarily want to be exposed to more tax than they would have been if they just stayed in their home country, right? And one of the incentives these companies like to provide to their employees to encourage them to go on assignment, in addition to, say additional allowances or pay or bonuses and so forth, is they provide what's referred to as a tax equalization. So basically what a tax equalization is, it's a policy that's in place to ensure that the employee is no better off or worse off from going on assignment. So when you have a US person that's coming into Canada, unfortunately our tax rates always tend to be higher, especially if you got someone coming from like Florida or Texas where there's no state personal tax. They're always going to be subject to a higher tax rate coming to Canada. So obviously the employee doesn't want to pay any more tax than they need to. So the company will basically say, okay, you're only responsible for the tax that you would be paying if you never came to Canada. So if your US tax rate is 30%, you're still going to pay 30% regardless. Any additional tax on top of it, the company will cover. So if Canada's tax rate, let's say, is 40% in this scenario, the company is going to cover that additional 10%. And what an equalization does is, as I said, it just makes sure that the individual is not paying any more than they need to, or not benefiting, where let's say they're going to a country where there's a lower tax rate. And the mechanics behind it can get a little bit complicated, but basically at the end of the day is, we compare the tax returns, we compare what the tax rate is if they never came compared to what they actually paid. And if there is that differential, the company basically covers it, which is basically giving the employee a bonus, let's just say, to cover that additional tax cost. So at the end of the day, that employee is the same if they never came here. It's just an added cost to the company for having employees come to Canada. So, companies always need to be aware of that, to keep it in mind when they do, let's say, bid on projects, or they have, or when they charge their fees to their clients or customers, that, hey, in order to fulfill this contract, I need someone to go up there and it's going to cost me X amount to get that person there. So I'm going to have to obviously find a way to cover that cost, right? And that's one of the things that we do in our group as well, is cost projections. So we can help companies figure out how much is it going to cost you to equalize this employee to fulfill that assignment in Canada, let's just say, so then they can take it into account when they, bid on projects and so forth. So,
I would think that these would be a lot of younger employees that would leave United States, come up to Canada. Then, of course, I start thinking about Social Security, Canada pension. So you must take a look at that as well. It must be covered somewhere in the treaty that, let's say, for example, if you need 10 quarters that you're committed to before you start to receive your Social Security, there must be some kind of somewhere that these employees are going to be made whole if they spend 5 years over in Canada paying Canada pension, and then they decide to move back as well.
Well, in addition to the income tax treaty, there's totalization agreements that Canada has with many countries in regards to Social Security. And the general rule of thumb when it comes to these type of agreements is basically, if you got a US person who comes to Canada for 5 years or less, they could still remain in the US Social Security program, because the idea or the intention is that they're only coming to Canada for a short period of time. They're going to return to the US, so we're going to keep them in the US system. And that kind of exempts them from the Canadian system. But where you have situations where they're going to come to Canada for greater than 5 years, or let's just say they're just someone out of university in the US and they get hired outright by a Canadian company and they say, okay, move to Canada, we're going to get you to work for us here, then they're automatically covered under the Canadian program. Now, in terms of the benefits, what they pay into the programs and all that, the totalization agreement between Canada and the US allow recognition for time spent in one country to be treated as time spent in the other. So if you have someone who comes to Canada for a short period of time, goes back to the US, they paid into the Canada pension plan while they were here, but they go apply for US Social Security benefits when they retire in the US. The time in Canada could be used to help them get benefits in the US, in addition to being able to apply for benefits in Canada. So they're not necessarily out of pocket in any way from the Social Security side of it. These totalization agreements ensure that either you should continue to pay into your home country, or if you pay into the host, you'll still get benefit if you retire back in your home country. So
Now, a lot of these employees, their compensation will be tied to stock options. How does that come into play if the stock option is on a U.S. company, but yet you're a Canadian? So I guess it would be two questions. If you're an American living in Canada, well, then you still got your two tax returns that have to be filed every year. But if you're a Canadian receiving these U.S. stock options, how would, as a form of compensation, how would that paint the picture?
I mean, when it comes to equity compensation, including stock options, we can have a podcast just on that alone, right? You get into the world of equity comp, and the issue there is that every country taxes things differently. They provide different credits or benefits in regards to that. Like, for instance, stock options in Canada, there's a stock option deduction that only allows half the stock option to be taxable in Canada under certain conditions. However, in the US, they don't recognize that, right? So when you got these cross-border equity plans, the one main thing that we always have to look at is, okay, how is this plan taxed in both countries? If there's differences in how they're taxed, how do we alleviate those issues? And then on top of all that, if you've got a US-based plan, does it work for Canadian-based employees? Or does it require a Canadian-based plan to be set up for these Canadian employees, right? So, when it comes to the equity compensation side of things, especially stock options, that's the one area that always has to be looked at is, how's it taxed in both countries? How do we alleviate any issues that come out of it, and whether we need to set up separate plans? I could say, if you're dealing with the UK, those plans are somewhat comparable, but the US, their plans, they have qualified stock options, non-qualified. They can have RSUs or restricted stock units that are treated differently. The term, sometimes that time deferral period, could be limited on the Canadian side where it's not limited on the US side or other countries and so forth. And that could affect the timing of when these things become taxable. So yes, this is definitely one area that I always recommend that needs to be looked at.
I have to say that, when you're dealing with Americans moving to Canada and permanently moving to Canada and still filing U.S. tax returns, that stuff is easy to manage. Canadians moving down south, you can exit Canada. That is easy to deal with. We know all the rules. But I have to say that this is becoming one of the most complicated areas of an American working in Canada for a U.S. company. And there's so many moving parts. So outside of tax, what else should that employee be worried about? And what should the employer be worried about? I guess it's really more focused on employees when they work in Canada.
Well, some of the other things, and I'll mention one thing from a tax side, and then we'll get into the outside or the non-tax items. So in addition to the payroll obligations and all that, having employees located across a border can also cause possibly corporate tax issues, sales tax issues for the company. Right? Whenever they have employees working in another country, if their presence there, depending on how long they're there for and what they're doing, that could create some issues at a corporate level as well as a sales tax level. So, I always say, as soon as an employee crosses a border, it affects everything in tax. So everything needs to be looked at. But some of the things outside of tax, immigration, right? You definitely want to make sure that your employees are legally allowed to be in the other country. I couldn't tell you how many times I get people saying, oh, I just tell them at the border I'm visiting my cousin, right? And then, next thing you know, they're working for 6 months, right? So you definitely want to, make sure that they're supposed to be there legally. Some of the other things are, medical, dental, pension plans that are based in one country may not necessarily work for employees in another country. So you may look at having to set up those type of plans locally in the country where you have employees in. Another thing is HR policies. Again, if they're designed for employees in the home country that the company's in, may not necessarily work or apply for foreign employees. And the one main area in regards to that is employment law. Employment law is definitely something that you want to look at when you have employees located in a different country, just because, firing or laying off an employee in one country may work, but then as soon as you go to do it in a foreign country, now you're caught under their rules where you're definitely not ready for or planned for. You definitely want to make sure any employment contracts are vetted in the foreign country as well to ensure that, it's considered a legally binding contract. I will say I'm not a lawyer, so I can't really comment on the specifics, but I know enough to know we need to bring a lawyer in when it comes to those type of items. Just because these are the things that people don't necessarily think of. They may just think of tax, but they don't think of all this. Or we may get a client that comes to us that is only aware of the the immigration issue, but they're not aware of the tax issue, right? And what we try to do is try to enlighten the individual, say, hey, you need to be aware of all this because it's not that easy just to have an employee cross that border, because all these different areas get affected, whether it's tax, immigration, or outside of tax. So
Now, in the space of the cross-border services that you offer, is this mobility service really growing? Are you hiring more and more staff to cover the workload?
It is definitely growing. When I first came to RSM, I came to lead the Global Employer Services Group. And when I came on board, it was just myself. I've been with the firm for 5 years. So if you ignore the 2 and a bit years of COVID where nobody was traveling, we grew to a size now of 5 within Canada alone. Our GES practice, as we call it in the US, is about 20 some odd people. And then we have people spread out throughout the rest of the world, in South America and Europe and in Asia as well. I will definitely say global mobility is definitely gaining a lot of steam. Coming out of COVID, we knew that once people start traveling again, it was going to be full steam ahead. So, everyone's traveling everywhere now. And in addition to that, these virtual assignments where people are now allowed to work from home in other countries is now created a whole new type of industry where we're kind of navigating through, just because, as I said, as soon as you have a cross-border employment arrangement, these issues come up, and it doesn't matter where the company is located or the employee, if they're in separate countries, regardless if they're traveling, not traveling, what they're doing, it creates these issues. So the global mobility space has grown exponentially since COVID because of these virtual assignments that are becoming just as equal as actual assignments. So yeah, so we're busy. We're busy. Yeah. We're looking to expand into Vancouver and across Canada as well. Yeah. So now, more than happy to help out if anyone needs assistance. So.
Now, do you find that you also provide these services for some of these smaller accounting firms that maybe do not specialize in mobility services? Do you do a lot of contract work for them or help assist them?
We do. Actually, RSM has an alliance, both in the US and in Canada, where smaller firms that don't have certain services can join our alliance and take advantage of the services we provide. So a lot of these firms are, small little firms throughout Canada where they may have a tax person, but they don't have an international tax person. So whenever they get an international tax question, they reach out to us through this alliance, and then we could get involved to help out. And in addition to that, just through, word of mouth and working with related parties, immigration lawyers and tax lawyers, we all kind of handle our piece of the puzzle. So we work with them quite religiously to help navigate through all that. And just through working with them, they may have an accounting firm that they're aware of that needs international tax advice that they may not have in-house. So, we're always happy to help out anyone, because at the end of the day, we're all here to service our clients. So if we're able to help out with our piece to help service that client, with other parties, then yeah, we're more than happy to get involved and help out where we can. So.
Well, Frank, I know this is the busiest time of the year for you, and I've taken, how much time have I taken? Almost 40 minutes of your day. So very, very much appreciated. And I know this is going to make a great webinar when we do our live webinars, which will be you'll see more and more of them over the next 6 months as we get up to full speed. So thank you very much for your time and very much appreciated.
Oh, no problem at all. Thanks for your time today, and thanks for having me on. This has been great. And next time we want to chat about music, let me know as well. So,
Oh, you better believe it. Well, on that note, and I heard this from these rock and roll friends of mine. This saying came from them. The closing of all their big concerts, they always, I believe it was Mick Fleetwood that would say, "Remember, the world is small. Be kind to all." So thanks again.
thank you. Have a good day.
You too.